Hey everyone, Benny the Finance Dog here. Welcome to my channel. Every Sunday, I provide a market update as far as what to expect in the week ahead, but with the Juneteenth holiday, the update is coming today as the markets were closed on Monday. Hope everybody enjoyed the weekend. If you had today off, congrats, you work for a cool company. If you had to work today, hey, probably about 90% of companies were still open and active today, so join the club. This week, we'll be talking about what to expect from financial markets between June 20th and June 24th. So let's begin. First, we'll take a look at the economic calendar. After a jam-packed week last week, the economic calendar looks fairly light this week with not a ton of events, plus we had a 1 day of closures. We'll still get our weekly reports like usual, and the only real event is Fed Chair Jerome Powell is expected to speak in front of Congress this week, but usually those conversations have little effect on market activity. It's kind of just him rehashing the same things that he went over in previous FOMC press conference from last week. So not to be too much expected there, especially compared with the action from the last time we saw him speak from last week. The only other event so far this week that is scheduled on my radar is on Tuesday. FedEx will announce their Q1 earnings. In the past, investors have paid attention not necessarily to if they beat earnings or revenue expectations, but generally their outlook and guidance on how the economy is doing and whether we are shrinking or expanding. As you can imagine, FedEx is a good pulse on just overall economic activity, as they do have the parcel shipping, e-commerce leg that they can keep a pulse on, as well as freight activity. In a similar vein, UPS earnings will be announced shortly as well in the coming weeks and will serve as another barometer as the two companies make up the vast market share of parcel shipping here in the United States, along with Amazon Logistics Services. So FedEx will have their call after close on Tuesday, and it will just be something to keep an eye on in the event that their overall guidance for the economic outlook is fairly weak. Slower macro event week after last week's could make for a trading week with fewer surprises. This is just my opinion, but with the quarter winding down, we could see less activity than normal, especially with the shortened week, and even end to this kind of bullish rally we've seen so far in the month of June. Healthy pullback could be good in the overall strength of the market, but we've had consecutive up weeks really since the beginning of April, with only 3 down weeks since the week of March 13th, at least on the S&P 500. So it's just something to keep an eye out for. With that being said, as we do every Sunday, we will go ahead and review the charts for SPY, QQQ, and Apple. Starting with the monthly chart on SPY, we can see that 440 level was rejected. We did break through and on up to a high of 443.90 last week before rejecting and closing just under that 440 resistance level. If we move over to the weekly chart, we can see we also found a floor at 430. I believe these levels will be key to watch this week. I know it's a pretty broad range, 440 to 430, but if we look at the daily, I'm sure to find some more levels between there that we can work with, such as the 433, 436, and 438 levels, which seem to have had some influence this week. Flipping over to QQQ, we have a similar story here. We actually closed above the 365 level last week, reaching a high of 372.85. So we actually broke above a 370 psych level as well before having a pretty harsh pullback. If we switch over to the weekly chart, we could see that that is now the floor. That 365 becomes a new support level. Nice round psych number. We did close at 367.93, so we're in between two zones. So that 365 is on watch as a support. 370 is on watch as a resistance. Below 365, we have the same levels that we passed on the way up: 363, 360, 355, 357 as levels to watch as well, just to keep that in mind. Now, let's go over to our baby in Apple. Apple has been fairly strong, again posting all new highs last week, so we're a little bit in no man's land as far as levels to look for to the other upside. We still have fib levels, at 200, major psych levels at 195, 190 to the upside. Coming down to the downside, that 185 served as a pretty good level. We closed right under that. If we're looking at the weekly chart, we closed right under 185 at 184.92, which also lends credence to my theory on it being a potential down week, or at least a sideways week this week. So to the downside, I'm looking for 183 level, 182, and so on and so forth, with a potential all the way downside at 175. I doubt we'll touch that 175 level this week, but we could be making moves towards that direction. So a light economic calendar week, very little earnings as well throughout the course of the week, so it could just be price action that leads a lot of the movement this week. So make sure you're obviously following along each day this week, still continuing the educational pieces as well as just recapping trades, or at the very least what I'm seeing in the market on a day-to-day basis. Hope you enjoyed the content. Make sure to like and subscribe. Please leave a comment on the tickers that you are particularly watching, and if you want me to go over any additional tickers, I can add that to our weekly check-in list. But thanks so much for watching. Make sure to like and subscribe for more content. Woof woof.